All right, welcome everyone to the trade setup. Today is February 27th, 2022. I'm going to go over a couple of topics for the coming week, and then we'll dive into the charts to take a look at key support and resistance levels to keep an eye out for to set up potential trades. As a reminder, Trade Setup is not a registered security broker, investment advisor, or a financial advisor registered with the US SEC. Any information provided today is simply research, and it's not meant to be financial advice to open or close positions in the stock market. Okay, so let's talk about what happened last week. A lot of events occurring. We first had a little bit of scare with, and I think we still do, with the interest rate hikes. And then Thursday, we had Russia invading Ukraine, which set the markets off and effectively caused a crash. The markets dipped about a little over 20% from the high. So, from a textbook definition, we had a crash and a lot of oversold stocks. And we had a lot of, on Friday, kind of market ripped higher. Uh, Thursday, Friday, it ripped higher. So, uh, and then over the weekend, I think we're still seeing a lot of headlines with what's happening in the market. People are keeping an eye on for what Russia is doing next and how the U.S. and the rest of the world is going to respond and what sort of um, reaction we're going to get from that. So a lot of things going on. Be very cautious. It's still not a good time to load up on calls. I think the market still needs to prove that we formed a bottom. Yeah, we ripped higher, but I think there's still a lot of uncertainty surrounding the market and a lot of unknowns that can potentially lead a little bit more fear and a little bit of more downside. So um, I'm not convinced that we're just going to rip back to all-time highs until we see a few things. And I'm going to go over what I want to look at on the bigger indexes, such as SPX, QQQ, look at key levels that need to be breached and held to talk about all-time highs again. Okay, so um, you know, just kind of be nimble right now. It's again not the time to go heavy on calls, and it's definitely not a good time to load up heavy on positions. One thing I did want to talk about for our members is I think what's happening is we're getting bogged down in the nitty-gritty details of everyday price action, right? Try to use these videos to understand the bigger price movement, right? So all the analysis that's done that I show you on these Sunday recordings is on the daily time frame, sometimes weekly. And the purpose of doing this is to give you a bigger picture and understanding of what's really happening, right? So understanding the bigger levels, understanding whether a big level is broken or supported, it provides a wealth of information on how to react to it, right? So you could mark these levels and um, pay attention to them throughout the week. Uh, like going from a daily time frame and then zooming into a 5 minute, it's a very common mistake to get lost in the $2-3 movement in the stocks, right? So uh, try to keep a more broader picture with the like day trading style. Okay, it makes sense to sort of look at 1 minute, 5 minute charts when you're trading. If you're planning on scalping, so scalping is a whole different strategy. You can scalp pretty much every day if you wanted to, And the way you go about doing the analysis on a scalp setup is much different than what I do here, right? What I do here is more so like day trading. You're holding a position for an hour, 2 hour, possibly overnight if the conditions allow it. So it's somewhat of a different style. So try not to like mix scalping and day trading. Those are two completely different uh, styles of trading, and they require separate type of analysis. Okay, so just be aware of what exactly you're trying to achieve with the trades you take, and then adjust accordingly. Right. So not don't set up don't it's hard to take the information I provide and then you just want to quickly scalp a play, which is pros and cons to it. You're not going to see the full benefit of the entire move because the analysis I'm going to provide is going to be on a bigger time frame, right? So try to keep those two things different. Try to understand how you should price to not price, I mean, try to position in order to see the full reward potential, right? So, all right, so let's get into it. This week, pretty eventful week coming up. Let's look at the economic calendar. For those of you that don't know, I simply just get this from investing.com. So, this week on Tuesday, March 1st, we have ISM manufacturing PMI for the month of February. US President Biden is likely going to speak on Tuesday, so keep an eye on for that to see how he's going to uh, react to a push in Russia pushing into Ukraine. We heard on Friday that he's implementing with the rest of the world sanctions. So let's see what's going on with that. Wednesday, March 2nd, we have ADP non-farm employment change numbers. This is going to be interesting. Crude oil inventories, again, keep an eye on this. I I don't think it's a good time to load up on oil stocks. Simply because from a technical standpoint, oil is moving between 90 and $110 on the invasion news. So it's not something I would kind of trust to be a long-term setup, right? So on a from a technical standpoint, there's no I don't see a reason to be trading oil right now. And then it's too up and down. You can't like news headlines control the movement of the stock, and so that limits the control we can have and lowers the probability of making a correct decision on a setup. So I kind of stay away from oil. Yeah, you should keep an eye on the energy sector. They are doing pretty well right now, but again, let's just continue to observe it, right? Just to understand where's money moving. Well, are we moving from tech into real estate? Are we moving into energy, right? Like those kinds of things. That's kind of why we pay attention to the overall market. Okay, Thursday, March 3rd, we have jobless claims. And then I think the biggest thing is going to be Fed Chair Powell testifying. Um, the insight he's going to provide on what's happening next, it's going to be key. It's definitely going to uh, determine the next move for the market, and I think everyone is waiting for what's going to happen. Now, my take is because Russia invaded Ukraine and now there's more fear, this kind of helped the Fed out a little bit, right? Because the market came down, valuations like the overinflated pricing in the stock market came down out of fear. Um, and so, it's kind of helping them out, but now the bigger question is how are they going to approach the increase in the rates, right? Because there's another curveball thrown. Before the whole Russia invading Ukraine situation, it was pretty straightforward. Like we were going to get what seemed like a 25 to potentially a 50 basis point rate increase in March. But now, what do we do exactly, right? So there's a lot of long-term things to think about with the invasion and the actual problems that these can cause in the overall market. So one thing I would think about is, right now food costs so much, right? Food, oil, gas, everything is it's inflated. So think about like from macroeconomic point, Russia Russia exports a lot of wheat. So wheat prices are likely going to go up. Soybean prices, all these things, corn prices are going to go up, and everything's already so expensive. So, um, this is going to be a matter of how is the Fed going to move? Are they going to just uh, take it one step at a time? They're going to raise rates and then see what happens and then react, or is it going to be just a full onslaught of raising rates every meeting, right? So I think those are some of the key things we need to understand, and hopefully Powell kind of clarifies that and when he's testifying against in on Thursday. So pay attention to that because that's definitely going to be a big market mover. With that said, like when he's testifying, best not to trade. It's not you're getting it requires a lot of luck less than like using your head about understanding how the price is moving, looking at the technicals, right? It's driven by every word. So the market's going to hang on to every word he says during this when he testifies, and every word he says is going to whipsaw the market up and down. um, the safest thing is to kind of stay out of the market, especially that day. Let the market kind of digest what he says, and then maybe later into the day, and possibly Friday, we can think about setting up more plays. Friday, March 4th, we have non-farm payrolls and then unemployment rate for the month of February. This will be interesting to kind of watch, right? Because one of the key things that the Fed wants is maximum employment, and they're saying that they're reaching it, but let's take a look at how it's progressing. Okay, so lots of events happening. I think the biggest one is going to be Powell on Thursday, so just kind of zoom into that and pay attention to what he has to say. Okay, so what I want to do next is I'll go over SPX QQQ, and then I'm going to start talking about, let me get my, I want to start talking about some of the plays that I'm looking at this week. Okay, so let's take a look at Thinkorswim charts. For this is going to be a special video. I'm going to fully share all the algorithm levels. Okay, so take time to pause the video and kind of mark out the levels. You can always return back here and then mark them. Lots of levels. You don't, it's up to you on how much time you want to spend marking all these levels. It all depends on how much you plan to trade, right? So, yeah. So take a look. This is our full algorithm. We're not hiding any of it. We're starting to kind of provide it to our members as well as anybody following us on YouTube or Twitter to help them elevate their trading game. Okay, so here we go. First thing we want to look at is SPX. So, let me first turn off. What I'm going to do is flip to the daily. I'm going to turn off the study. Okay, just to kind of give you an idea of what's happening. Number one. So overall, last week, we started on a Tuesday, right? Monday we had off. we broke down right here, and we talked about this level last week, the 4280 level. And so Tuesday we bounced off of it, and then Wednesday we dropped, and so puts were the play that we called out on Discord. So if you bought the puts, watching the bigger analysis that I provided, and you held them even through the gap down for the Russia invasion that happened the 23rd night, and then closed out here, that was a solid 120 point move, right? So um, to kind of understand like what we were talking about at the time is we're trying to see if that level holds again. So we know that buyers try to hold this area. They succeeded. It rallied. The price rallied higher. Effectively, we formed this double top, right? And we talked about this double top. We talked about playing the break of this neckline right here, right? So once that broke, that was an easy play. And if you missed it, you could have again entered here on a retest of this neckline break to kind of capture this entire move as well. So a lot of ways to play SPX, the past couple weeks. And we went over all these potentials in the previous video. So I highly encourage you to watch those, and not so much to point out like how right we are, but more so understanding what we're thinking at the time. So you can apply that same thought process in similar situations, right? So you want to be prepared. You want to try to see things differently. And then, yeah, we can move forward from there. So, okay. So overall, right now, market, still making lower lows and lower highs, if you think about it. Okay. So if we're gonna, I'm just gonna quickly, just to be relentlessly clear, we're still in a downtrend, right? Now we had a fantastic rally Thursday and following Friday, and it was great. But if we start thinking about what's really happening, we're not out of the woods yet. We're not in a position where it's like, okay, we're good to go. Let's just rock and roll. We're going to all-time highs. Absolutely not. We are not going to all-time highs yet. A few things need to happen before we can have that talk. So the first thing, if we take a little closer look, we did break a downtrend, so the intermediate downtrend. We still have not broken like the bigger downtrend, right? So we're still making lower lows and lower highs on the daily time frame. So this week, what we want to look for, it's very simple. If this needs to continue, calls above this level can work right here in this 43, 4400 range, right? We want to look at the 4400 range. Calls above can work, and then I would keep an eye actually right here again, like this neckline that we were talking about, because if you pay attention, like this is not only an area of heavy supply, right? We have a drop, base drop. It's also the neckline, okay? And we also had, this is the launching point, right, of the supply zone that played out and caused a massive resistance. So it formed that lower high, right? So here's a lower high, here's another lower high, and then we're starting to push back higher. If we breach this 4400 area, it's possible we see the test of 4476, this area, right? So what we're looking for is calls here can work towards here, and at this particular area is when I would start considering playing puts, right? So not so much back to the downside to see if like the bottom breaks on this daily candle, but more the bigger setup I believe can be here, right? So this area is a battleground between buyers and sellers, and you can clearly see that. Once we breached above, we tried to stay above. Once we broke below, we stayed below, right? So this area is a battleground for buyers and sellers. And I believe the best way to go short is right here, right? So this general area is where we're kind of looking to go short. Above the 4,400, you can go long, buying calls at least up till here. All right, so now let's kind of get rid of all our drawings, overlay our algorithm, and we can fine tune the entry, and this will all start making a little bit more sense. All right, so here we go. There's our algorithm levels. Now there's quite a lot of them, but we kind of just need to zoom in to see which ones are more relevant to the actual setup that we have. So here we go. We're looking at the 4,400 range. The next algo level up is 4,410. So we can set this one as a trigger, right? And this works out great because if we use this as a trigger, the next three, 1, 2, 3, kind of takes us into that supply zone of in the 4,475 range. So in this particular range, right, between 4,475 and 4,400, I would exit the calls if that's something that is taken from here. So calls above 4410 can work up to here, and then from here I'd consider flipping to puts and put the stop loss above 4503, right? So if it breaks above, and it breaks above this previous lower high, that's a good sign. And at that point, the put setup is invalid. And so a good area to add, you have plenty of room to capture should it work out, and then very little to lose on the stop loss side, right? So if this breaks, we start closing. Very straightforward. You close out the puts. The thesis is not going to work. More buyers showed up. Buyers overtook the sellers, and so now we're pushing higher. So something to consider this week on SPX. Keep an eye on this 4410 level. Keep an eye on 4475, right? Anywhere between here, we want to start seeing who's in charge. Are the sellers coming back to drop it again, or can the buyers buy up all the supply? Should we not have the scenario play out where we're just moving higher this week? On the bottom end, I'd just wait for 4266 to break, right? We have a stacked pivot right here. Sorry, not pivot, stacked algo. It's an area, it's a pivot area where the price moved. But we have a stacked algo right here. So what we're looking for is basically, this will likely hold on the first touch this week, but if it starts breaking, the best thing is to look for a play beneath the 4266 level, right? So puts below this can work. So keep an eye on 4410. So here are the levels again that you need. I'd keep an eye on right here. All the levels I'd keep an eye on this week, the bigger ones, depending on how the market decides to move. Okay, so pay attention to that. What you want to look for is if it starts breaking. Let's say we start just pulling back, trying to test the bottom again. Below 4266 puts can work, and this can easily see 4200, right? So here's another stacked algo right here where I would watch it hold, and if it breaks, then definitely coming back down to 4150 down here, right? So puts below this can work as well. So keep an eye on the stacked algos. Keep an eye on where we want to look for calls, where we want to set up puts, depending on which way the market decides to move, right? So there's opportunity in every direction. So you just have to be attentive to it. All right, so let me clear this. I'll put these. I will put these in the plays in the Discord channel. Okay, the specific plays, strikes, and everything. Take a moment at every change in every ticker. Pause the video. Take the levels down. They're good for the entire week or so. So go ahead, mark the levels, and they should help you enhance your trading capabilities, right? You'll know where things are moving. All right, let's talk about QQQ. kind of a similar setup, right? So if we look at QQQ, very similar in the way it's setting up. We had that same, so overall, we're still in a downtrend. We made the double top, right here. And then the neckline broke. So market moved in a very similar fashion, and then this neckline broke. Puts below worked, and then if you missed that again, you had a chance to re-enter on a back test right here of that neckline one more time in this particular range. It played it all the way down. So this week, what are we looking for? Well, kind of the same thing, right? We're in the same boat. We can start looking at calls above this particular level. So, before we've had this area act as resistance, and once it broke, we kind of started moving. So pay attention to the 350-50 area right here. Kind of watch this area to see what happens. You can jump into calls early, watching price action above 348 level, 348.41 towards the top side, and then definitely consider an exit right here where there's stacked algos at 355, right? So not only is this a neckline area, it's also supply zone. It is also the point of a lower high, right? So you have your right here. If you look at it, boom, one market moves up and then just drops, right? So that right there is your lower high. There's your there's a lower low. That's a lower low. Sorry, that's yeah. So beginning of this particular downtrend, keep an eye on this. Above this, and I would say safely actually above 358 level this week, 358.11. I would if we start showing strength above this particular area right here, okay, I'd consider calls, further out calls to the upside. So this is where we technically need to get above and close above this week. So if we can close above this particular level, we can start talking about retesting, like setting up to test highs again. But if the price comes into this 355 level and like sellers take over again, we're gonna see another pullback. So again, watch these levels that I'm talking about. Pause the video, go ahead, mark them down. And then make sure you're writing down exactly, the thought process behind what I'm saying right now. So you better understand and you're better set up to kind of take advantage of the trade that the setup that comes along, right? On the bottom end, again, I'd wait for 333 to break, right? So this is an area we have a double stacked algo right here in the 336 range. So pay attention to that. If we start closing below that on the daily, okay, next thing I would do is I would look for weakness below this one. Just because this is a good area to kind of confirm whether we're going to see more weakness or not. But this right here at 333, the next level below, is where I would consider setting up a put trade. So below 333.43, I'd consider puts. Okay, on the downside, should we start moving down? All right, so just to quickly recap, if you're looking at calls, if the market decides to move up Monday, Tuesday, calls above 348.41 can work. If you're really want to be a little more cautious, above 350 is fine. I would stop out, basically take profit at 355.21 double stacked area, and then flip to puts here and put your stop loss above 358.12, right? So calls from here to here, puts from here to here, okay? And then if this breaks, you want to say puts from below here, 333.43, puts below. Lots of ways to set this up, where a lot of ways to play it depending on which way the market moves. Keep it as an if-then scenario. If this happens, then these are my plays. If this happens, then these are my plays. And if the market just consolidates and chops, then obviously you want to stay out of it. Okay. All right. So we got that SPX, QQQ, SPY, pretty much a similar story. Let's go right there. zoom in. All right, so SPY, similar story. We got our double top, right? Area of supply right here. So here's the double top, and then we retested the neckline and then broke down, forming a lower high. Same story. We want to look for calls above 440.50 this week, and then basically take a full exit at 447.56, double stacked level right here. Okay, so this area, neckline, area of supply, also a lower high right here. So, above 440.50, calls can work towards the top side, towards 447.56. At that point, I would consider flipping to puts and play puts on the way down, keeping 450.59 as your stop loss. So if we close on the daily above that, then I would start considering closing out the put, right? So at that point, that's a clear signal that buyers have overtaken the sellers here, right? So there's more demand than supply. The demand has overtaken the supply, so the price is likely going to go up, and a breach of 450.59 and a close above on daily is your dead giveaway that the buyers are now in control. We're likely going to see another push higher. So watch this area. Watch 440.50 this week. That's your trigger to play calls towards the upside. I'd watch to play puts here. On the bottom end, same thing. I'd wait to see, this is kind of an area where we've bounced quite a few times, right? If you look at it. So the safest thing, I believe, is to wait for 424.91 to break, right? So watch to see full candle closes in this range. I want to see candles, a daily candle close here, right? So not wicking, not wicks, not come down here and then get bought up the night, like the same day, and you form this wick. That is not what we want to look for if we're considering puts. We want to see like a candle, full candle close like this, like we're seeing here, right? Like a full candle close on the bottom end, and that's exactly what I would want to look for on this side. So puts below the 424.91 can work towards the bottom end. Again, watch for the full candle close, not just a test. Okay, the first time it touches. No, we need to see a close below. Okay, so hope that makes sense. All right, so now again, go ahead, pause the video, mark down all the levels you want. The ones that I'm talking about, at least, you want to kind of keep an eye on this week. All right, so next one, let's look at AMD. All right, so AMD, very interesting. It's starting to break the downtrend now. The one thing I would kind of start considering is these breakouts that are happening and how they're just coming back down, right? So when you think about how the market moves, it wants to more so the market, but like smart money wants to trap the breakout traders, which is typically retail, right? So if you can understand that the best thing is to wait for the breakout to actually confirm and then enter on a pullback, I think you'll take fewer losses. The issue that we get into when we're talking about trading and trading psychology is that we see all these plays like, hey, 110 call above 109 price level, right? Whatever, AMD. As soon as that 109 level hits, like we want to enter because we don't want to miss even a penny of profit potential. And so I think that's where most traders fail, right? If you're losing money in the market, even following like simple plays, there's a reason for that. The reason is you're getting baited. You're getting baited into buying, and then the smart money is going to flip the script on you, and you're going to panic the moment it comes back down, right? So always wait for the confirmation. Yeah, you'll make, you might make a dollar or two less, but you have a lesser chance of walking away with a loss and a better chance of walking away with a small profit. And over time, that consistency of collecting profit will help you out. So what are we looking for on AMD? Very simple this week. We want to see 122.61 break, and what we're looking for is technically this downtrend to break, right? So far, if we're looking at it this way, um, if we're lining it up, just we're seeing one touch, two touch, three touch right there, a nice 45-degree, so that's a valid trend line. And now we're basically just looking for the 122.61 break, right? So if it can break above and start closing above, we could see a little bit of a better push. Now, can you buy on the break? Absolutely you can, but the risk is much higher. Always the best thing is to wait for that retest. So let's say we get a breakout, right? Let's say we get a breakout, hits our double stacked levels, and then comes back down, retests the 121 area, which is in this range, also the downtrend. This is your best place. This is the best place you want to kind of structure a trade. Why? Why is that? Well, pretty simple. If you enter here, right? If you enter here, and you get caught, and let's say the price moves up, and then for the day it starts moving up, only to sell off later in the day, and we close back below. Yeah, you can quickly play that, but it's not a sustainable move. So if that happens and you effectively form a topside wick on a daily, that's seen as a rejection, and we're just going to move down, right? So that's quick money. That's a quick trade. The more long-lasting trade is a breakout backtest of this particular area of this downtrend, right? And your stop loss is right below. So the stop loss is closer to your entry in this case, which is the trend line, than it is here when you enter here on a breakout. So a lot more risk here to take the trade on the first go. Better to wait for a pullback, retest, and hold for a move higher. So either way, you can structure a trade in whichever direction you want. It's totally up to you. Depends on your risk tolerance, your size, your ability to understand what's happening with the price action and react in time. Okay, so this week, very simple. Just watch the 122.61 calls above that can work towards the upside. Up here at 126.60, I'd consider an exit for the call side. For the puts on AMD, just look at the 113, right? So we have double stack levels at 115.36. This area, you can see, has held. A lot of buyers have stepped up in the past. And so the best thing is watch to see if this demand is diminished, right? Let's see if the demand's dried out. If we have more supply, let's say we reject, right? Let's say we don't break out and we stay below the trend line, and now we're just going to continue. We're going to stay the course of making lower lows and lower highs. Best to play puts here, right? So just wait for 113.81 to break and a close below, and puts below that can work. So it will take out basically all these buyers that were coming in to buy the price. It'll take out all these people here. It'll take out this Friday group here. So better chance to play puts below the 113.81 mark, the more safer setup. Okay, so calls above 122.61, puts below 113.81. Again, I will put the exact plays with price targets, take profit price targets, and stop losses in the Discord, but this is mainly to show you how I set up plays right now and how you can think about it as well. All right, next one, let's look at Amazon. All right, so Amazon, again, very interesting. We still have a downtrend here. Amazon, if it breaks that 3100 level, calls above can work towards 3167. So simple setup. We're looking for a breakout of this downtrend above 3101.52. I'd consider calls towards the upside towards 3167. So calls above here, max take profit right here, and I would also I would consider flipping to puts here as well. Like, it's possible because look, this is an area of supply. You can see it if we kind of just zone out this particular area, right? We zone out. Let me just get rid of this. We zone out. There's nothing but rejection candles here, right? Rejection, 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 rejection. That's a lot of supply right there. I bet there's still sellers sitting there, right? They're waiting for the price to come up so they can dump it again. So I'd consider puts here. Calls from here to here, puts from here to here, right? This is where I would structure a put. But if for example this scenario does not play out, where we don't break out and start moving higher, puts below 2955 can work, right? So double stack levels. This is kind of the area where buyers have showed up here. If that area basically fails, this is your area to look at. Then I would consider puts right below it. Okay, so that can definitely work towards the downside. Okay, so what's next? So again, take a snapshot, pause the video, mark all the levels you want. Okay, so let's talk about Facebook. Now, this has been an interesting one. We're going to talk about Facebook here. Facebook has basically done nothing, right? It's just clear downtrend. We got that sell-off from earnings, and every time we thought a bottom was in, we just made a new bottom. So, the downtrend on Friday, it kind of breached this downtrend that we had. So I'm looking for a continuation. I think probably the best setup, the cleanest setup is above these rejection candles, right? So you have wicks, 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 and then this area has turned into resistance once it's breached. Not by you could see that this double stacked algo level is also an area of support which turned into resistance, correct? So I'd consider the safer approach is to consider calls maybe above 220 towards the upside, but as of right now, because there's already a breakout, technically a breakout occurring, we could see a follow through towards 218. So for this week, I would watch 212.62 for an entry on calls. Okay, so above here, calls can work, and this is your take profit, max take profit. These levels you can take profit, start taking partial profit, and then full exit here. Consider taking, I would structure puts here again, right? So a lot of these stocks are playing out in a very similar fashion, just because of the way the price moved and how our beautiful algorithm works in our favor with how the price movement happened historically. So calls above here towards 218.10, and then you can flip to puts. He's flipped to puts at 218.10. Okay. So this is assuming we get a continuation. That's how I would structure it. If, for example, we don't start moving in this direction, I'd consider puts below 200 level, right? So below this, we can again go back to see 195, 190. So assuming this scenario doesn't work out where we just continue to rip higher, I'd look for puts below here. Otherwise, I wouldn't want to touch it. It would be nice to see it back test 190 one more time, hold, to form a clear bottom. Because look, we formed a what looked like a bottom here, right? Like right here. Here's your bottom. Uh, Pardon my drawing skills here. Okay, right here. Oh, that looked like it was starting to go up, and then boom, it just kind of dropped. Like this area held, and then once it broke, it just flushed down. So I think the safest scenario is wait for that pullback towards 190, 195, see if it holds, and then I would start considering swinging shares or even like investing into that. But I'm not buying this just yet. You know, this was obviously an amazing move, uh, crazy move to be honest. And then another follow through day, and the entire market basically shows these candles, right? Two massive green candles, one after another. Um, People definitely bought the war, so I think the best thing is to wait for some confirmation and not get not get sucked into the FOMO of missing out. Okay, so pretty clear setup here. Just look for calls above 212.62 towards 218, and then flipped it puts at 218 with a stop loss at 220.46. And then if we don't move higher, then just watch 200. If 200 breaks, we're coming down to 195, 190. All right, NVIDIA. All right, so NVIDIA, let's take a look at what's going on with NVIDIA. So we broke a key level, the 238.10 area, right? Like this area has been a battleground if we just kind of highlight it. Rejection, 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 broke above, stayed above, stayed above, stayed above, broke below, stayed below, stayed below, and then we finally broke above. So we want to see 238.10 hold this week. Kind of the same pattern. We want to see this area hold. If it can hold, then possible to see this move higher. Um, I'd basically look at this as, so, you know, there is a head and shoulders pattern here, and this can be considered a neckline. And then on this, the right shoulder, we could see this as a potential downtrend forming right here. We moved higher here, and then we broke down. So this week, again, you know, I'd keep an eye on this area. I'd keep an eye on, let's see, 241.57. Keep an eye on 244. You know, just watch to see if this area can break. If it breaks, we could see a push actually towards 250, 256. So yeah, kind of pay attention to that area. We want to see 238.10 hold on a back test because we don't want this area to break now, right? It closed above. Let's see if it can stay above. So watch to see if this area holds. Calls above, basically calls above the 244.72 can work all the way up to, let's see, the 250 area. So I'd consider exit here, and you can see, kind of see why, like this area right here, rejection, rejection, partial rejection there. So watch this area. I think that's the next area to kind of keep an eye on for a potential move down again. The easiest, probably the easiest setup, you know, as far as considering puts, it's going to be all the way up here, you know, in this 267 area where these tops are. So if these tops continue to hold as areas of resistance or heavy supply, we could see another pullback. So this one is kind of dependent on price action. So just kind of watch Watch to see how it behaves Monday. If it can break 244 early on Monday, we could see a rally on this one towards 250, 252. Okay, so keep an eye on that. On the downside, 226.85 needs to break, and you'll kind of get the hint if the price closes below the double stacked algos, right? So if we start closing below, more likely than not, you could set up puts below the next level below, towards the downside. Okay, so go ahead, pause the video, write down the levels. You can use them as you wish. All right, let's talk about Microsoft next. All right, Microsoft. Very good stock. You know, it tends to hold value pretty well. And last week, again, with the massive move following the invasion, we broke the near-term downtrend. Okay, that doesn't mean that we're out of the woods yet. We're still in a downtrend, but the near-term downtrend is broken. So there might be opportunities here. Very simple is this 300 area, right? Um, this is the clear setup. You have an area of support, right? And then that turned into resistance. A supply zone, also an area where it made a lower high, right? So here's a high, here's a lower high, lower low, and then a breakdown. So if we can get back above 300, you can play calls. So calls above this 299.54 can work towards the top side. As far as taking an exit, look at the levels above. I'd consider a full out exit, probably in this 305, 306 range, right? Like, and then if we are to start moving and testing the 307, I'd consider puts here. Okay, I'd consider puts right here, just because this is an area of resistance. If you look at it, we kind of just highlight this area right here. You can see that this has been an area where buyers and sellers just battling it out, right? Once we stay above, it wants to stay, price wants to stay above. Once we're below it, stays below, stays below, stays below, stays below. Once we push up above it, stays above, stays above, stays above. Once we break below it, we stay below, right? You get the idea. So this is a battleground. Coming from this massive move, if we are to test this, I'd heavily consider puts here, right? Like this is an area where I would take that trade 10 out of 10 times, where I'd set up puts at 307.73. Okay, so calls above 300 towards the 305, 306 range, and then if the price starts to show weakness, price action shows weakness in this area, I'd consider puts there. If, however, we don't see the move up, okay, to play the calls and then play the puts, well, on the bottom end, same thing. Watch the double stacked algos. If these start breaking and you start closing, you know, in this range, I'd consider puts below 286.89 right here. Okay. If this breaks below 286.89, puts can work towards 280, 276, which is the double stack, another double stacked, and then final level down here. All right. Okay, so hope that makes sense. A lot of ways to kind of slice and dice this. You know, it's not about predicting that price is going to go here. Like, I think a lot of new traders, they want to be told that it's going to go here and it's going to go there, because they're already in positions and they want to feel better about their choices. It's not how trading works, all right? You don't enter a trade and then look for confirmation from other people or the charts. You wait for the confirmation and then take the trade, and then you play out your rule set to follow through on how it works, right? So that's how you really trade. If you're looking for confirmation of where things are going to go, you're not trading. You're basically jumping into a position and hoping something is going to work out for you. That's not trading. That's just mindless gambling, right? So uh, think about how I'm thinking about how to structure these trades, right? I'm looking at different scenarios. If this happens, this is where I can structure calls. This is where I can structure puts. If, however, this happens, this is where I can structure calls. This is where I can structure puts. Got to play out these scenarios. What can happen? Okay, if this happens, here are the levels I need to look at to set up calls. Here are levels I need to take a look at to set up puts. That's basically what we need to do here. That's how you become a good trader, right? You need to have that foresight, and you have to develop it. All right, so let's look at Tesla. Last one I'm gonna go into, and this one is pretty interesting, right? So Tesla gets hit the most when you have a volatile environment, and that's because it's a high beta stock. Okay, and if you don't know what that means, just you can Google it, but it tends to take a pretty big hit, and this is probably like one of my favorite stocks to trade. Um, but it's just recently, it hasn't been paying out. So I think that there is a setup coming this week. It's pretty simple. So we had sellers, right, bringing the stock down, and then buyers picked it back up. So a bunch of buyers are sitting right here. So I think the most easiest play is puts below this 781.51 level. So if this level breaks, strong chance that we're going to get a stop loss run to the downside. That's a lot of buyers picking it up, and if that level breaks, that means that all those buyers are going to get taken out, and all their stop losses are going to get hit. They're going to probably panic sell. We're going to see a flush down. All right, we're going to see a flush down to at least 753 15 area, and then below that, possible to see 718 700 range. Okay. Top side, pretty simple. Just look for 822 to break, right? So above 822, 01 calls can work towards the upside. Just be careful with this one. I'd look for an exit maybe right here. Right? Pretty simple area to identify. You see area that held. It's held here. Once it broke below, stayed below. So 853.20 is likely the area you want to take your profit in that kind of mess around with. If we start seeing strength above, I want to say at this point, like I wouldn't even structure a trade above the double stacked algos. I'd wait for the 945, right? Wait for 945.60. This is an area that everyone has their eye on. Once this breaks, Tesla will rip for 50, 100 points above this level. So probably the best setup is up here when we're talking about like, multi-day run or a very good risk to reward. But that doesn't mean there's not trades to be taken here. So calls above here can work as a quick trade towards the top side. 853.20 is your max. At that point, I would kind of just observe. I wouldn't jump into a roll up. I would just kind of watch. Okay, watch to see if above 853, at some point we can close near this area and start consolidating for a setup for a rip higher above 945. Right, that would be my way to my take on this. Below here, 781.51, easy area to play puts. All right, easy area to play puts. You're trapping a lot of buyers when the price breaks below this area. So puts below this, like a very simple setup. I would take that 10 out of 10 times. Okay, so go ahead and mark these levels. Yeah, pause the video, take a look, whatever you need to do. I'll post the entire trade, like a consolidated version of what I said, by calls above this trigger, puts below this trigger. And then we can move forward from there for all the platinum members. Okay, and if you are brand new to watching these videos, we highly encourage you to come join us. We do provide a 2-week free trial. All you have to do is go to the tradesetup.com, sign up. You'll get instant access to our Discord. In our Discord is where we kind of share all the trade ideas. We have live buy sell alerts. And throughout the day, we do provide market commentary. So our traders are up to date on what's happening, whether it's an economic event or there's some uh, stock specific news, or just watching price action and making comments on it, right? So all these things are very helpful for being a day trader and setting yourself up for success. With that, I like to end this video. Wish you all the best. If you have not done so, we highly encourage you to follow us at options_setup on Twitter, official trade setup on Instagram. If you want to test us out and test out our algorithm system and how we kind of trade around it, join us at thetradesetup.com. It'll give you access to our Discord community. And then please subscribe on YouTube if you enjoy this type of content. We are more than happy to kind of provide a lot of educational content as well as trade ideas out there, right? So thank you very much, and we'll see you in the next video. Wish you all the best this coming week. Thank you very much.